Good afternoon. Hi, this is Dale Ellentenny from the Gustin Show team. I'm here today to talk to you about the housing boom that's going around the country. Now, it obviously varies from area to area, and a lot of that has to do with property taxes probably, but that's a whole nother discussion. But you know, for those of you who have been around as long as me, 29 years in the business, you've seen the good, the bad, and the ugly, and obviously in 2008 we saw the housing market take a sharp downturn, putting it mildly, and with that sharp downturn came the loss of a lot of products for people who otherwise you would think would be eligible for loans in some way. So right now you've heard many of my videos and you heard me talking about the non-QM loans, and I think what it does is it's bringing people back in the right capacity. I would still consider very common sense lending, who are giving them an opportunity to grow with this housing market and get into the housing market, whether as a homeowner themselves to occupy the property or as a real estate investor. And there's a lot of that going on right now. People buying and selling properties, fixing them up, and there's a huge market for the real estate investors right now, and you don't have to verify income on that, meaning tax returns, W-2s, or pay stubs. If you're a person who has 20% to put down, 25% to put down, you have reserves, they're really going to zero in from an underwriting perspective on your FICO score. You know, do you have any recent bankruptcies? Do you have any recent foreclosures? And more importantly, can the property sustain itself? And what I mean by that is if you're buying a 2-unit building and the average market rent for each unit is $900 a month, that's $1,800 a month in total gross average rents per the appraiser. So your PITI, your principal, interest, taxes, and insurance, can't exceed that $1,800. That's called a 1-to-1 ratio. Now, I recently have done some with that similar example where the PITI was $1,200 and the gross average market rents were $1,800. So that's a great debt service coverage ratio, as they like to call it. So keep that in mind. If you're a real estate investor, this market's growing. That's part of the growth in the housing market, is people getting in and buying, fixing up, either holding on properties, selling the properties. If you're a self-employed person, you really were affected by the 2008 housing meltdown. You know, that conventional route of using tax returns adversely affected a lot of people who otherwise cash flowed very well through their business and had plenty of assets to show. Well, now it's coming back in the right capacity. You know, if you have 20% down, 15% down, even 10% down in some cases, you know, there's a good chance that you can qualify. Obviously, they're going to look, do you have any recent foreclosures? Do you have any recent bankruptcies? They're going to look at the cash flow from your business. You can usually expect them to net out a 50 expense factor from the top of your gross annual revenue. So, for example, if you have $100,000 or $200,000 a year in gross receipts from your business, if it's $200,000, they're going to use $100,000 in qualifying income. They're also going to want to see that you have 3 to 6 months reserves. If your payment's $2,000 a month, 3 to 6 months of that. If you're a first-time home buyer, plan on having to verify your rent with more than just receipts from a landlord. Canceled checks, a digital payment history, or a management company are usually acceptable ways to go. And then the other way, and I've mentioned this before as well, if you're a person who's had a recent credit event, maybe you had a divorce and there was a foreclosure as a result of a divorce, or you had a foreclosure, you had a deed in lieu, you had a recent bankruptcy. If you have a significant amount of money to put down, 20, 30% right in that space, there's a chance you can get back into the housing market as a homeowner again and not have to wait maybe the 3 years to be an FHA buyer, for example. So really, there's a lot of things here to consider, and I would say if you've got money to put down, and if you're going to be an owner-occupant and you make a decent wage and you feel like you can afford a mortgage, you really should give me a call, Dale@LoanCabin.com. My phone number is 630-479-2719. My email address is Dale@LoanCabin.com. You can like on Facebook, share to Twitter, and all the other social media sites that I'm forgetting to mention right here. But thank you very much and have a great day.